Still going strong for the markets. You're not really seeing any edginess ahead of that Brexit vote. But what is the vote all about? As the crucial Brexit vote is slated to take place tonight, markets worldwide are awaiting with unease, although Asia and us are holding out well. Chaos continues in hopes of a clean Brexit deal seem to be fizzling out. Whether Theresa May would resign, a disorderly exit from the bloc would take place, or the entire Brexit process is going to be discarded, only time will tell. Investors globally have had various concerns regarding the overall impact of leaving the EU, resulting in severe opposition to the deal in British Parliament. So what are the scenarios likely to pan out? Mubina joins in with details on that. Mubina?
It's not just the most expensive divorce, it's also the one that's going to be involving millions and millions of people. This is Brexit, and this is, of course, the big divorce from United Kingdom, between United Kingdom and the European Union. Now, do remember that Theresa May, the Prime Minister, is going to be putting forward her plan for Brexit. And by the way, this is the second time she's going to be putting it forward to the Parliament. And it looks like, in all likelihood, it's going to be another defeat. And this is going to be the biggest defeat in 95 years for the government in Britain. Now the question is, what's going to happen if and when Theresa May does indeed get her bill defeated in the Parliament? There are lots of scenarios. First up, of course, is the fact that we will have, of course, a referendum being held again with respect to her own leadership capability within the Conservative Party. And remember, this is the second time that the question would be brought forward, that whether or not Theresa May actually does have leadership within her own Conservative Party. The second step may be that she may have to have a plan B, which means going back to the EU, taking a whole series of new assurances from the European Union with respect to certain provisions that her own government is not happy with, and then come back to the Parliament before the 21st of Jan. That is something that's going to be very, very time-pressed and complicated as well. She could also resign as a leader of the Conservative Party, triggering an internal contest to replace her without a general election. A vote of no confidence. Once again, the opposition Labour Party has said it will call for a vote of no confidence if her deal is indeed rejected. Then it may go back to the ballot if her government does lose and the Labour as well is unable to form a new government. An election, a general election, could be called. We also have some longer term options, and that includes a second referendum on Brexit or a people's vote. That's something that's still unclear. But unless the plan to give control of the process to the Parliament is successful, it would require the backing of the government of the day, and a new referendum can be called only if it is approved by the Parliament. All the series of options before the British government in case of losing the Parliament vote do seem very, very tough at this point of time. Do remember, the sterling has already depreciated almost about 11% in the last 9 to 10 odd months, and in all probability, Theresa May's government may be facing a very, very tough task ahead of her.
All right, Mubina. Thanks very much. Quite an apt summary of what lies ahead with regards to this big global event. Alastair Newton, who's co-founder and director, Alavan Business Advisory, joins in with his perspective on the big Brexit vote. Alastair, we're going with the foregone conclusion that Prime Minister Theresa May will lose on the floor of the House once again, and that's the House of the Commons. What happens next, and how would the markets react? Because even in yesterday's session, it seems like the markets are on tenterhooks. You saw a 1% decline in the FTSE. It almost is giving us a sense that the market is working with the worst-case scenario.
Well, I'm not quite clear exactly what the worst-case scenario is, and to a certain extent, the first thing we need to do is to see the size of the defeat, assuming that the government is indeed defeated tonight. If the vote against the government to the margin is less than 100, and I'm picking that number not quite at random, then I suspect that May will try to bring her current deal back to the House next week, as your commentator has already suggested. But if she goes over 100, I think she's got a big problem, not least because the House has passed an amendment last week, which means that the government has to come back with a plan B no later than next Monday. My sense is that investors will probably largely hold off to see what happens in the next 3 working days after today's vote and what the government brings back to the House on Monday before you see a significant reaction. In the meantime, of course, Labour may look to force a vote of confidence in the government, which they can actually do. But there is a question here. If Labour believes that it would defeat the government in a vote of confidence, why hasn't it done so already? Despite the fact that the government may well be defeated on the vote tonight on the May Brexit deal, there is a sense that the government would manage to stave off a vote of confidence in the event that Labour brought one. So I think we'll still have a Conservative government next week. I don't think we're heading to a general election imminently. What comes back next Monday is the big unknown at this stage, and I don't think investors are going to overreact until they get a sense of what is going to happen then.
Right. Alastair, is there a possibility that it could be a hard Brexit? Because up until now, the 2016 referendum at least, it was more tilted in favour of leaving EU at a roughly 52%.
Certainly a hard Brexit is a distinct possibility. You'd have to put a significant probability on it, maybe even as high as 50%. Some would say higher than that. The problem here is that the hard Brexit is the default option. Unless Parliament does something to prevent that happening between now and the 29th of March, it happens by default. And keep in mind too that the government controls the business agenda in Parliament. Backbenchers, ordinary MPs cannot just bring motions to the floor without the government actually signing off on it, despite what happened last week with an amendment which the Speaker allowed through to the disappointment of the Brexiteers and the government, which did bring in this 3 working day fix, which means that the government has to go back next Monday. So somebody has to do something to prevent a hard Brexit from happening. And given that their House is clearly very divided indeed on other available options, other types of deal, the Norway solution, having another referendum and so on, it's not clear how you get a majority quickly for an alternative to a hard Brexit. So you do have to take the hard Brexit possibility very, very seriously indeed at this stage.
Yeah. And what do you think that would mean for the markets, for the currency markets, for the UK markets, also for the UK economy in terms of just pure numbers and levels?
Well, I'm going to be very careful what I say here because, of course, we all remember the disastrous, frankly, Remain campaign in 2016, which was labelled Project Fear by the Brexiteers. And there are a lot of nightmare scenarios for the UK economy. The UK clearly has not done a great deal of preparing on contingency plans, be it at the government level or, by all accounts, at the corporate level. So there is likely to be a significant impact, a significant negative impact in the event of hard Brexit. But I also think that the European Union, faced with the prospect of a hard Brexit, would take steps to make the damage done as minimal as possible, because it's not just damaging to the UK, it's also damaging to Europe itself. I think it would be very unwise to start predicting hard and fast numbers about your UK stock market, sterling and so on. But I also think it would be very fair to say that despite the caution in markets, which we're seeing and have been seeing for some weeks now, a hard Brexit certainly is not priced in by any means at this stage.
Alastair, great having you on the show. Thanks very much for very quickly telling our viewers what this big global event means for world markets.